Thank you, everyone. Welcome to this panel. I'm very excited about the topic, the future for LRTs. Obviously, you know Lido is not a liquid restake token, but we share a lot of basic primitives of the asset. So Lido essentially is a middleware on Ethereum which connects two types of users, stakers, and node operators, mints a liquid asset. So LRTs do something similar. And with the evolution of this and restaking itself, we somehow got included in restaking as being a collateral and underlying asset of LRTs, which makes me happy because we will continue to be part of the innovation that we'll discuss today. So please, for other speakers, a round of introductions and what do you do with your protocols? What do they do? So we can kick it off.
Do you go that direction?
Yeah, that's fine.
All right. Kaitai here, co-founder of Yala. We are not a restaking protocols either, but we accept restake tokens as collateral. So what we do is we use BTC restaked assets as collateral to mint a stablecoin. And this is a way for our users to not sell their assets and bridge this liquidity to flow from the Bitcoin ecosystem to the rest of the ecosystem. So our stablecoin is called Yala USD, YU as symbols. Thank you.
Hi, my name is Warren. I'm the co-founder of Exocore, which is an L1 for aggregated security. So this is another term for like omni-chain restaking. Aggregated security combines not just economic security, but also cryptographic security and extends it to scale decentralized compute. And yeah, so we're looking forward to we're emerging out of like a semi-quasi stealth mode. We've kind of been the dark horse in the restaking race and starting to announce some partnerships and stuff down the road. But
hey, I'm Kratik. I'm founding contributor at Renzo. I am not Lucas. Lucas couldn't make it, so I'm his replacement today. At Renzo, our goal is to make restaking as easy and as accessible to everyone. We launched almost 10 months back, more than $1 billion in TVL, 150 plus integrations, and 7 chains. We're live on EigenLayer, we're live on Symbiotic, and we'll soon be live on Jido on Solana.
Hey, my name's Rok. I'm one of the co-founders of Ether.fi. Thanks everyone for coming out. Ether.fi is a liquid restaking token protocol on Ethereum. So we started in restaking specifically, but our thought is to be a place where you can save, invest, and spend your crypto. And so we're kind of doing this vertical integration of things. So we just announced today Ether.fi Cash, which is a credit card that you can spend. It's like a Visa credit card that you can actually spend your crypto. So we're pretty excited about that. And yeah, really excited to be up here with all these guys. I think the restaking space in general is super exciting. And crypto, we so often get caught in like our little like circle and bubble, but everyone working up here is trying to work to like grow the pie. And everyone who's building right now is going to be a winner, I think, like as long as crypto grows. So how does crypto grow? And I just think restaking is like one of these like killer use cases that will continue to like bring more people in the market. And so, yeah, anyway, excited to chat.
My name is Nader Dabit. I'm the Director of Developer Relations at EigenLabs, the team behind the EigenLayer protocol.
Love it. So to start with soft questions, more closer to the audience, there's a bit of a market volatility in recent times. How does it affect restaking itself and the vertical integrations on top? Feel free to pick up in any.
Kick it off, I guess. So it's a little tricky. So obviously, because restaking is a form of economic security, and economic security is effectively the price of the token times the supply, so the market cap, and that actually symbolizes the costs of attack on a market. If you're going to overload, try to attack a market, you could actually overload it with money by just spinning up, a certain amount. So when there's volatility in the space, it can bring down, these market caps, which affects the economic security. And it's tricky. I mean, I think Shriram talked about it. Like there's news that says like, oh, now EigenLayer's TVL dropped a bunch. It's like they didn't do anything. Nothing. Like people didn't leave. It's just the price went down. So it's kind of weird, but it affects like retail or like news or media because people like to talk about the price dip. My parents love to, tell me that the news told them that Bitcoin's dying because it's down 10% again. But this has a material impact on the restaking space because it's in the form of actual economic security. Now, does that translate into like how does that affect AVSs on a day-to-day basis? Unsure. We're still not sure how that's going to play out, right? And even further, we haven't really seen an issue where like there was like one token crashed, which like affected maybe like there's a restaking protocol that's built on a single chain, and that token like imagine if it was Terra. If there was a restaking on Terra and Terra just went to 0, and there's like AVSs that were tied up in the Terra economic security, that would be very bad. And so, our kind of take is we believe in a diversity of tokens and having multi-token restaking actually to kind of normalize some of the volatility in the space is actually healthy. But I think there's still a lot to kind of, because it's new, like everything's new, and we haven't really seen a downward kind of crash, especially with slashing enabled. So there's still a lot of lessons to be learned in the future.
Yeah, I think we saw like a pretty big day in terms of volatility, and I think it was really cool to see nothing having to do with LRTs or restaking in the news during that time. So.
Yeah, I mean, I think volatility and bull market, bear market has very little to do with shared security and very little to do with restaking. And I think, personally, I think that's a large premise of restaking. Like, regardless of the market volatility, an AVS can choose which asset they're going to accept economic security in. And if it's ETH, for example, which is like most of, EigenLayer's TVL, if it's ETH is, well, statistically speaking, way more stable than your own token. So like you go back to Cosmos, you go back to Alt L1s, you go back to any other asset that's not BTC, ETH, maybe Sol, they're going to be way more volatile than ETH itself, right? So you accepting economic security from Ethereum itself means that regardless of the volatility, you are protecting your economic security from whatever happens, whether Terra goes to 0 or 3AC, whatever, right? So I think that's one. And B, also on the restaker side, volatility has very little to do with the risks that the restaker is taking when they are securing AVSs. Like traditionally, when people say, "Oh, I'm gonna risk up," that's usually taking leverage on price action. Like when I'm going 100x on Solana, like Solana drops 1%, I'm gonna lose all my capital. But when I'm securing 100 AVSs, let's say I can technically, hypothetically, if I'm securing 100 AVSs, price action has very little to do with the slashing risk that I'm undertaking. So I think from both sides of the marketplace, I think price action has very little to do. And I think it needs to be more like, I think people need to be more well educated, and like we need to talk about this more, that we are actually very protected on an infra level from any price action and volatility that comes from the market.
Yeah, I think that we try to not pay attention to price action as much as possible because it'll just drive you insane. If you think about it, restaking is so new. Like, it's less than 24 months old. And so, like, the fact that we're here talking about this, like, massive industry and is just insane. But you get frustrated and upset users because there's prices that were talked about and valuations, but, like, I mean, it's insane the amount of like economic value restaking has created in such a short period of time. One of the things with crypto is like the market is very public, very quick, right? Like, and it trades very quickly. So, but we try to just avoid that and just focus on building and giving people, like users, apps that they'll use on an everyday basis. And so that's the chasm that we're trying to cross now, is like, how do you bring crypto into everyday use case? Instead of fighting over the same 5,000 wallets in DeFi, that have most of the TVL and the same 250,000 that exist in DeFi, right? Like, how do we get the next 10 million people using DeFi, even if they don't know it? That's, I think, the win and what we try to focus on. So stay away from price as much as possible.
Yeah, I agree with you above. And one last thing to highlight is we have two categories of people. Users, so maxis, no matter the price volatility, bull or bear market, they will hold your assets. On the other side, you have retail investors where the price volatility is more sensitive to them. So they are trying to make a profit either through restaking or through short-term trading. I think those short category of people might influence a very short part of the whole protocol and the ecosystem. So that would be noise to the whole ecosystem. Not to say they are not important, but the ecosystem can live without them. So I don't think the volatility per se would be a huge difference for all the maxis.
But does it mean we are, as an industry, bull market dependent to push the innovation forward, given we transparently didn't have an inflow of new users for a while, given the market states?
I think it's new use cases. I think that's what onboards more people, and so it's new use cases. And some people don't like to gamble, right? And so some people don't like to invest in the stock market. And so it's like, that's why we think figuring payments out is massive, right? So if we can figure payments out and keep that on rails, that's like a huge win. But the more, like, you need to get into everyday use cases for people. Because right now, the two main use cases of crypto is a casino, and people like to gamble, right? And so, like, I trade Pepe or whatever said thing, even ETH, it's speculative, right? Like, hey, I'm buying this and I'm levering up on Aave or whatever because I think it's going to 10x, 20x, right? It's not, you have like some very hard like ETH believers and stuff, but that's probably the main thing. Stable coins is the other use case. And so it's like, what are other use cases that's going to bring people in? I think the whole DeFi ecosystem that was built in 2021, like, it's amazing. Like, there's really good stuff happening there, but we don't need our 20th fork of Aave, right? Like, that doesn't like do anything for us as an industry. And again, like, all of us will win if we can make the pie bigger, because we're just a little speck in the global economic world.
I think it's like almost opposite. So you figure like restaking was born out of the last bear market. Like, it was the only thing that was cool and interesting and people were excited about last year and like early this year. And we were very bearish and at that time, which is actually, I would say, is a very bullish sign, because the thesis goes like, you look at the like Fortune 500 companies, like most of the top companies were born in super dark bear markets. Google was founded in like mid 90s, whatever, and like so they were born in really bad markets, and despite the market being bad, there was still a lot of interest. And so restaking actually was kind of the highlight of the last bear market, and so I can only expect that it'll continue to grow in interest, and it becomes like, I think the conversation used to be, how does restaking fit into DeFi? And now it's, how does DeFi fit into restaking? Because restaking has kind of become a foundation layer for yield. And with LRTs, you can now participate in DeFi protocols. So it's like, that's your base is to restake it, and then the next step is to do something in DeFi. And so I think the next big wave is actually going to raise the boats a lot.
Yeah, I feel like there's a distinct difference between what people think of in terms of DeFi, like DeFi summer, versus what I would consider the yield that they would get from participating in restaking. Essentially, DeFi, as people know it from like DeFi summer, is essentially just all Ponzi schemes, and it's all unsustainable, and it's all kind of like bullshit, and it's not good. I think DeFi, in the sense of like something like Aave, is great. But people kind of think about DeFi along that whole spectrum, and it's kind of hard to understand what people expect sometimes. And I think like with actual mechanisms that enable people to kind of have secure holdings of tokens like ETH, while helping power developer platforms to make it 10x or 100x easier ultimately for developers to build out and experiment with new services that then kind of bring value back to those ETH holders who are holding ETH anyway. It just makes a lot more sense when you kind of fully understand how all of it kind of works.
Yeah, I think I'll echo that.
You can shout.
I think it's okay, right?
No, use words.
All right. Yeah, I think I'll echo that in the sense that LRTs provide or offer users a way to still participate in sustainable non-Ponzi DeFi or like lend their assets, etc., while at the same time also extending shared security to infrastructure projects, especially the ones that they believe in, and at the same time also get rewards out of it. But to answer your question, I think number go up has in the past usually gotten more users. Times of hyper speculation and prices going up and high leverage brought in more users, but like how many of them actually stayed and how many of them actually sustained? I think in the future, like as we go forward, I think the nature of the industry, the maturity of the users is gonna significantly increase as we get more sustainable use cases. And well, if we don't, then we might like cease to exist. So we really have to make sure that we have those use cases and offer people a medium to add value to their lives and stay in the long run.
You usually build your project during the dark times, during the bear market, and you yield the result during the bull market. And I think from the investor's perspective, usually when you are in a bear market, you think more on the dollar amount of the investment. And when you are in a bull market, you think more of the units, so 1 ETH or 2 ETH. I don't know if you guys remember when Apple Pro Vision went live, there's a meme saying, is 2,000 something too expensive? And the other side is 1 ETH. They say, okay, it's very cheap, then you can invest. So similarly, if you are in a good market sentiment, people have faith in the market, saying that we are a uptrend market, then I think there's more adoption because people are willing to explore, not counting on the dollar amount, but more on the unit of each token.
Warren actually gave us a very spicy take that DeFi is now actually in need to find its place in restaking compared to vice versa. Could we deep dive into the dynamics of DeFi? What changed with the introduction of LRTs, and what will it do in future compared to what was only possible before with LRTs?
I can take this to start. We actually asked our users. We did a survey with 60 plus miners holders, so ETH or Bitcoin maxis, and we observed that all the category of people are more educated, so the expectation is higher. They wanted to improve the liquidity efficiency. So in other words, they are not satisfied with only staked version of BTC or staked version of ETH. Now they wanted to leverage those stake versions, so that's why we have seen the rise of LSD, LRT protocols. And lastly, they are pretty reluctant engaging if they are not sure about the security aspect. So slashing mechanism is pretty important. And also the interoperability between different protocols is also what our users are trying to see. So it's good to see that ETH is leading the way. We have other users trying to do the same on Bitcoin or other type of blockchains such as Solana. So I'm pretty excited to see how we can, as a stablecoin, use all those different assets as collateral.
Yeah, I think in a lot of ways, like it's changed where it's kind of added like another. So typically, like the whole DeFi like kind of looping effect, right? Like it used to be like stake it, get an LST, like deposit in here, lend it, borrow it against this, and then take collateral, and then kind of loop it here. And so what restaking, I feel like LRTs have done is just kind of like added another like stake it, restake it, and like do, so it just creates like another form of yield or just another step. And in that step, like that's an important piece to be in. Like if a category can change behavior of like DeFi users and how they do this, like, and they actually go out of their way to take another step in the process, that's huge. Because that represents a lot of just activity and utility. And it won't really necessarily matter like where it is, but being inserted in that process, I think even it adds another step. It's actually super lucrative.
Yeah, I guess the mic's working now. So I think majority of the use cases are so far have been very similar to LSTs, simply from the fact that restaking wasn't fully in production, except primitives or speculative items built on top of points, which was super interesting while it lasted. But I think there's a lot more to it. And going forward, I think there are very interesting mechanisms that are being built for reward sharing, handling and harvesting the rewards that AVSs themselves generate, LRT Square that LRTs are working on for a common governance token, a common reward token between LRTs, and a way for, even on the governance side, a way for users or token holders to dictate or have their say or vote towards which AVSs should be secured, which of them make sense, which risk managers actually align with the protocol, and there's a lot more coming, but we have to be patient. It's a long game. It's a marathon.
I think that's so true. I mean, it's been like 18 months, 24 months, and so the amount of I think the time frame people want this to happen is like super quick and instantly, and it's going to be a 2 or 3 year process. To start, it's yield, right? Like that's why people come in. It's like yield, getting comfortable, TVL go up, more TVL come in, and like people get comfortable. But it's solely driven by yield, and you're getting sophisticated investors who are now saying, oh hey, I can be an actor in this market, get more yield, and like, you know, do stuff that I would do in a traditional market in crypto, and so I think that is like good. And what it provides, I think, is the opportunity for building, right? And so what the most important thing in restaking over the next now and for the next 3 years is building of AVSs that are like build sustainable businesses, right? Because that is there needs to be building there in order for people to continue to restake, to keep yield high, and then people need to have confidence that those people building are going to pay out a reward and whatever. And so I think that is like one of the really important things is, you know, Eigen has done an amazing job making this happen, right, and is going to kind of supplement to keep this moving forward over the next 6-12 months. But like AVSs need to build sustainable businesses now. So like that's the most important thing. So like building within the AVS space. But like it also, restaking allows us opportunity to do it very cheaply and very like effectively. And so which is an amazing like, you know, opportunity. So it when you like look back, take a step back, it's pretty amazing everything that's happened. And the time frame still, it's been so short. Like if we can just extend that time frame, like if you look back in 3 years, I think it's gonna be like amazing where we've come from.
I don't have much to add. I just think it's interesting to kind of what he was saying, that it is kind of still relatively early, and it's wild to talk to one person or see one tweet, and they were like, it is, they're basically maybe pointing out there is no killer AVS in their mind yet. And then you talk to someone else, and they're pretty blown away that there is, there are multiple AVSs that have billion-dollar valuations that are built by crack teams this early, and then you have like everything in between. So it's kind of less to we worry less about that sort of I would say feedback from an individual like person that's very outspoken, and instead we kind of understand where we currently are based on our experience, and like mentioned, just improve, build every single day, try to make improvements day after day, and over time you kind of have a lot of improvements.
I'm curious to learn, given all what was presented by now, do LRTs or should LRTs continue building the communities, taking a retail route, getting the individual stakers, or should they focus more on the institutional side, given there's curation within these to find maybe B2B collaborations or even enterprise side, or both, in your opinion?
I think both. One of the things that people that I've talked to recently about BTC-Fi specifically is that whales will kind of prop that market up, and they can also bring it down pretty quickly too. In Ethereum, like we have so many different people that come in. There's tons of whales and institutions within restaking. I mean, I think that's just kind of a natural evolution that's happened. But I think the more people that you have in there, and the more different people, the more anti-fragile you are, right? So I think it'll continue to be both. The real thing is like, how do you get how do you get the money that's not in crypto currently, like in your traditional capital markets, and get them into crypto? And what are those use cases that will make that happen? So that's like, kind of what I think. But in general, more people is better. It makes you much more anti-fragile.
Yeah. Oh, go ahead.
Yeah, I think we should have restaked ETF. That would be, yeah. Yeah.
When?
Yeah, I think one doesn't come at the expense of others. Like institutions are not coming at the expense of retail users. And also there's a spectrum. Like you have, sophisticated whales that are like, and you also have dumb institutions. Like I think it's not a binary thing, but also like in the last 4 years, ever since DeFi has been a thing, I think every single
Mine off, man.
all right. Yeah, I think every single DeFi project that wanted to exclusively build for institutions, I can't think of anyone that actually succeeded. Like most of them couldn't make it. And as you rightly said, like a whale can come in and prop up your TVL, but they can also bring it down very quickly as soon as they see another opportunity. So distribution matters a lot. Community matters a lot. And you, at the end of the day, you have to build for both, and you have to also make sure that you are also adding value and not just getting 2 or 3 institutions that are majority of your TVL, essentially distribution. So yeah, and restake ETH ETF. I think that would be very sick.
Yeah, I think definitely both, because institutional liquidity is very sticky. It's like when it comes, it stays a long time. It's not flighty like retail. Retail comes and goes constantly, and that's what creates a lot of volatility. So the weird thing about crypto, in general, most financial markets start institution B2B first, like over the counter. Just like 2 businesses end up striking up an agreement. Crypto started retail first on exchange. So like it came in sliding in, from left field, upside down and inverted, like completely unlike how every other financial market has happened. And traditionally, those financial markets, when the institutions come, they kind of start setting the rules because the businesses are affected, and the retail, they kind of protect the retail. So this has always been the case, and the weird kind of case for crypto, and the same with restaking, it's retail first. So when institutions come, what they are going to expect is a lot more risk-adjusted yield. And we've, taken some meetings with like big institutions that kind of want to get smart on this because they're like, hey, we're staking. What's like the step to restake, and this is kind of what we need. So I think we're going to see a lot more risk tools, and I think there's quite a few that are being built on EigenLayer for like actual delegation and getting really smart about like measuring the risk of restaking to some of these ABSs, because these institutions aren't going to deploy until they have those tools, so they can make those risk-adjusted decisions.
I'd like to bring a little bit nuances on that. So if you design a product, you should find product market fit. And you couldn't do everything right at the same time. So depending on how you project your roadmap to be, you can start with customers, retail investors, and go to institutions, or vice versa. And a lot of projects are talking about governance next. So should we give the decision power to the community? I think it's good if the project is mature enough to be self-driven. Otherwise, it's better for project founders to really have the reign and drive innovation and next step for the product. So both could be the answer, but maybe one step after the other.
One comment that just on the stickiness of the capital. I think this is one thing that is hard about crypto. Like I said, there's probably 5,500 wallets that matter. Like there's not a ton, and they can influence so much. And I was talking to a fund who has a lot of capital, and said, yeah, we're like medium to long-term holders. And I was like, oh, what does that mean? They're like 6 months. I was like, oh, okay. That's like a really short-term holder in TradFi. So it's just interesting, right? It's such a volatile market that's still, there's so many market dynamics that need to play out, not only in crypto, in restaking, whatever. And so it's like, that's why we just try to not pay attention to the price action. It's like you can't, there's nothing you can do to control it. Just focus on building a product that users love. If we can do that, like across the board, then like we're just in a much better place. And like we're rebuilding a financial like system, right? Like that's the amazing part about this. It takes time. It takes a lot of time and evolution with that. So anyway, yeah.
Speaking of time, we literally burned through our panel. I'm surprised how it kind of blitzed, and I have so many things I want to ask you, so I suppose the audience as well. But before we call it a day, maybe just few words if you have something that we didn't cover. I think that's very important around LRTs, restaking. Maybe to start with Nader, leader in restaking on a protocol level. What's next for us?
We're very focused on providing the best developer experience and the lowest barrier to entry for teams wanting to build ABSs, just to kind of enable a lot more innovation. So look out within the next 7 days. You're going to see a really great team coming out of Stealth that we've been working with for around 6 months. That's building really, really great developer tooling focused on ABS developers. We're also working on a lot of new updates on our end for reference architectures. So if someone wants to start building a ZK coprocessor or a coprocessor ZK TLS, we have a handful of these reference architectures that will allow you to kind of just fork the code base and then start building out your own differentiating features and then kind of get started.
Yeah, I just like to say, like, I appreciate being up here with all you guys. I feel very fortunate to be around like people building in the space. It can be very challenging at times. So, and I just on the other side, you guys like listening to us. So appreciate all you guys in the work you do, because I know at times it's challenging and whatnot. So, but I'm really excited about the future and what we're building. And I think, like I said, we're still so early in crypto that everyone can win who's like building in the space. And if you, everybody should look at Ether.fi Cash. That's my sales. Goodbye.
All right. Yeah, I mean, on our side, cool. Bye. So in the next month, I think we're anticipating rewards to go live on EigenLayer. We're anticipating slashing to go live by the end of this year. So that's something that I'm looking forward to. Solana will be launching restaking with Jito Sol by early next month as well. If anyone's staying around for Breakpoint, please feel free to join all of our events over there. And yeah, look out for more updates on restaking. And thank you all.
Yeah, I think it pays to be an optimist, especially in crypto. I'm going on my 11th year in crypto and still as optimistic as ever. But yeah, for us, like it's kind of a coming out party in the next three months or so. We just started announcing some of the validator partners going live on public testnet. We'll be gearing up for a mainnet push, shortly after. And just kind of finally getting to see the light. And I like to remind teams that mainnet launch is like the start of the race, and it's not like the finish. The real work happens once the network's live. So just gear up.
At Yala, we think that liquidity is zero if there's no velocity on it. So that means we're trying to listen to the community and to hear what is asked. We are starting to accept BTC first as collateral. We're expanding to LRT, LSD tokens. So happy to see if the community has anything else to say. In terms of roadmap, we are going testnet next month, mainnet 2 or 3 months down the way after we finalize the audits. So I'm really excited to share everything on our social media accounts. Thank you for having us.
Thank you, everyone, for listening to us. And please, a round of applause for our awesome speakers.
Thank you, Marin.